So in today's video, we're gonna be going over 10 shares of this company that I just bought that I think is very undervalued. On top of that, we're gonna be going over some other ways of making income with a dividend investing portfolio, which is the wheel strategy. So stay tuned and find out exactly how it's done. So before we jump into the Robinhood portfolio, don't forget to drop a like on this video. And if you guys want some free stocks, links are gonna be down there for you new investors. It's free. All you gotta do is just sign up and deposit $100. You can get free stocks with Webull. You can get some free stocks with Robinhood. On top of that, if you guys want to reach me one-on-one, you can join my membership to ask me any type of questions that you want. Links are going to be in the description for Patreon and all of that. So on the Robinhood portfolio today, we are sitting at $88,944.25. It's been a very mixed day for me, up almost $900, 1% on the portfolio. And after market hours, I'm down almost $250. So the company that I'm buying this week is Alibaba, ticker symbol BABA. So for anybody that doesn't know, Alibaba is basically the Chinese Amazon, but it has not been performing as well as Amazon in the markets. Just going through it really quickly, on the day it's down 3%, on the week is down 0.26%, on the month down 12%, on 3 months chart down 25%, and on the year it's just basically been flat, no growth on the year. But if we jump into the 5 years chart, is up over 200%. This company has not been performing as well as a lot of the other tech companies like Amazon, Facebook, Tesla. If we take a look at the 1 year chart here, we can see during the pandemic, there was a little bit of a crash, and then it actually was performing pretty well all the way up until October. And during this time, a lot of bullish news came out for Alibaba just because Jack Ma. And if you guys don't know who Jack Ma is, let me show you what he looks like. This right here is Jack Ma. He is the meme machine himself. He likes to dress up during these concerts that he puts on for Alibaba and all of their employees. This is him dressing up like Michael Jackson, doing songs, doing dances. This is him. He's out of the box. He started Alibaba in 1999, became the richest Chinese citizen, and a lot of this company is very similar to Amazon. But so let me correct myself for 1 minute. Alibaba is like the Chinese version of Amazon, but it's a lot more than that. It's like Amazon, eBay, PayPal, the Cash App, all of that wrapped into one. They do a lot of business, a lot of commerce. So let's take a look at the position that I bought. I bought 10 shares. Average cost is $232.49. Market value is just below that now, below my average cost. So I'm actually down now because of today. So if we take a look at my total return, I'm down $43.90. And I am not worried, all right? I believe that Alibaba right now is very undervalued. I'm even doing some cash covered puts on here, which I'll explain later on how I'm making extra income with cash covered puts, the wheel strategy. I made videos on that in the past, but we'll go over that later. So now let's take a look at the Morningstar report. It is a 4 out of 5 stars, so it is well on its way to being undervalued. Economic moat is very wide. Like I said earlier, they have so many different types of business. I'm thinking almost everything on Amazon is coming from China. Everything is almost made in China. I think 40% of the products on Amazon is from China, and most likely it is from Alibaba. So we take a look here, over 40% of Amazon sellers are based in China. If you guys don't know anything about like the Amazon FBA model, that's probably one of the easiest ways to start selling stuff on Amazon. All you do is you go on Alibaba, you find a wholesaler or somebody that wants to sell you some type of product that you can sell, and you would buy the product off of Alibaba. They send it to a Amazon warehouse where they'll pack it and ship it for you. That is how most of Amazon works. So with that being said, fair value is sitting at $296. So you can see there's about a $70 gap between the actual price, market price, and the fair value. Uncertainty is still very high, and I'll go over that in a bit. Stewardship is pretty poor. But if we take a look at the earnings, Alibaba has beat earnings in the last 4 quarters. That is also a good sign that is undervalued. So now that we're on Finbox, let's take a look at the fair value from here, $303.55, upside of 33.5%, and medium uncertainty, so it's a little bit different there. All the analysts here, 48 targets at $339. Market range, we saw lows of 170 and we saw highs of 319, and it is sitting somewhere right in between there right now. So there's a few reasons why Alibaba is really beaten up right now. And number one is the Chinese regulation. Number two, American regulation on talking about delisting Chinese companies. Number three, Jack Ma, he criticized China, and you just can't do that. You cannot criticize the Chinese government. You would have to bow down to the Chinese government if you want to do business in that country. Jack Ma, he has a very American mindset. He went to school here in America, and he grew up as a very underdog type of character. He applied for a job at KFC and he got denied. And now he's one of the richest people in China, or the richest person in China. How crazy is that? How do you go from getting rejected at KFC to being one of the top dogs in China? And lastly, I think one of the biggest reasons why Alibaba has been doing so poorly over the last 3 months is because last November, Ant Group, which is another company 30% owned by Alibaba. Ant Group is a microfinance type of company, a fintech. They basically give out loans to normal people that they can't get loans from the bank. And because of that, there's a lot of government regulations. On top of all the crazy stuff that he said to the Chinese government, they had to cancel their IPO. This was supposed to be one of the biggest IPOs in all of stock market history. Ant Group was supposed to do an IPO on November 5th, which was a few months ago in Shanghai, and it would be set a new world record valued at $313 billion. With all that being said, I think there's just a lot of noise right now, and a smart guy like Jack Ma, he's not gonna just let his business that he's been working his entire life for just blow up. He's gonna have a slap on the wrist for the Chinese government. He's gonna bow down. I think eventually Ant Group is going to IPO, probably at another time and date. On top of that, that's gonna help raise the price of Alibaba in the future. My price target is gonna be around $300 maybe at the end of this year or next year. Worst case scenario is just gonna trade flat for the whole year. So that means I'm gonna dollar cost average. I'm gonna pick it up at the lower level prices. I'm gonna pick it up at the higher level prices. And eventually it's just gonna even out. And right now I still think it's undervalued. So I'm happy to buy into it right now. So some things that I'm doing to collect extra income from this is the wheel strategy. I'm selling cash covered puts and I'm selling cash covered calls. So for Alibaba, I'm selling a cash covered put here at $230. So I've already collected $580 in premiums from this on Friday. At the end of the week, I don't see the price changing that much. If the price of Alibaba drops a few more dollars, I'm okay to pick up this 100 shares. And my break-even price right now is at $224.20. So I still have a pretty decent margin there when it comes to this cash covered put. So if you caught my last video about the 3 stocks that I'll be buying for January 2021, I was buying Boston Beer Company, I was buying Uber, and I was buying Lemonade. And I made the most money so far off of my Lemonade cash covered put. And Lemonade right now is sitting at $170.80. Insane how much it's been so volatile, but insane how much growth it had over the last week. It's up almost 50% over the last week. So here are the numbers for this contract. Lemonade, I made a $140 strike price, expires at the end of this week. $800 in premiums. And, I closed this out earlier today and I made so I had to buy to close and that cost me $65. But, I'm going to take that $735 profit and I'm going to take it off the table and I'm going to reinvest that back into the portfolio. So in summary about the wheel strategy, you're doing the wheel strategy because you want to collect the premiums and you're only working with stocks that you want to own. If you are, buying some penny stock or some crazy stock that someone on YouTube told you to do, someone on YouTube told you to buy, most likely that's not going to be something you want to keep in your portfolio for long term. I'm doing this with Alibaba, I'm doing this with Gap, I'm doing this with Realty Income, I'm doing this with Apple. So with all these companies that I just mentioned, I'm willing to hold them for the long term, and that's why I'm able to collect the premiums on a regular basis. So that is it for my update for this week on my Robinhood portfolio. If you guys want to see more videos from me, go check out these videos here about dividend investing, real estate investing. Don't forget to like, subscribe, hit that notification. You can also follow me on Instagram, follow me on my second channel, jump into my Discord as well, and I'll see you guys in the next video. Thanks for watching. Bye.